So in the past 20 years, there has been something that has quietly been occurring in the background. As the things go on and as life goes on and as we see the economy grow and shrink, there's been something that has been constantly growing consistently for the past 20 years. And it's something that could be quite concerning. Now, no, it's not the fact that the Vancouver Island marmot is on the verge of extinction, which is, come on, I mean, it's pretty sad. There's like 90 of them left in the world. But something that's almost equally as important as these poor little guys that are, seriously, I mean, like they're almost extinct, is the fact that the US is racking up a very sizable amount of debt. Now, I'm going to throw up a chart here to show you the amount of debt that America has at the moment. It's about $24 trillion. And, just looking at this chart, you probably don't really make very much of it, considering that most charts are either going up or they're going down. I mean, this could literally be a chart of the amount of chickens in America, for all you know. It's just a random chart that we're looking at. So what I want to do today in this video is show you how this can relate to people like you and me, because sometimes these big numbers from the government, they just seem like something that is so far out of reach, it's out of touch, and there's no real reason to worry about something like this, because maybe you look at your bank account, you look at your savings account or your investments, and you think, I'm totally okay. I'm not going to think about some of these things that are going on in the global economy. And so what we want to do here today is try to bring some sense to some of these different areas and some problems that we have, but also some solutions, some potential ideas that we could use to fix some of these problems. So if you're new here to the channel, consider subscribing, dropping a like on the video, and let's get started here. And the first thing I am going to show you is, once again, this chart of $24 trillion. You can see from the year 2000 to 2020, it's grown from nearly $5 trillion to $24 trillion. But this doesn't really feel like it means very much. So how can we make sense of this? The first thing I want to do is actually show you something that's a little bit more showing of some events that are going on. And this is the debt to GDP ratio in America. Now, the World Bank did a study that found that once countries reach over 77% of a debt to GDP ratio, it tends to slow down a country's economy. And this is for pretty obvious reasons. This is the debt that the country has versus their GDP, their gross domestic product, which is one of the best ways of measuring an economy, looking at the gross domestic product, the total output from that country's economy. And so looking at something like this, when we see that it does reach over 77%, traditionally it does have some negative effects on that country's ability to grow their economy. And this does make sense. Consider that if you were to take out a number of credit cards, maybe you have student loans, you have some car loans, you have some personal loans, it's going to be more difficult to build wealth if you have a lot of debt. It's just going to be more of a drag to try to build wealth if you have all of these other bills that you have to pay. So this is one of the reasons why having a sizable amount of debt can be a downside. So one of the easiest ways to relate this to people like you and me is, let's say that when you pay your taxes, let's say that $1 out of every $10 that you pay in taxes goes towards paying off the interest payments for the US government debt that they owe to various countries, people, and institutions. So let's say that $1 out of every $10 goes to pay off the interest on this. Now let's fast forward a few years. Maybe in some case, and these are just numbers that we're using for the example here, that instead of $1 per $10 that goes towards the interest, if this debt continues to build, suddenly it's $2 for every $10 that you pay in taxes that goes towards the interest payments. And then eventually it's $3 for every $10 that goes towards it. And then $5 for every $10 in your taxes that goes towards just paying off other countries, other people. And the problem here, as you can see, is that suddenly it starts to eat away at a country's ability to pay for their own programs in their government. It becomes difficult because suddenly all of their tax money starts going towards other countries, going towards other interest payments rather than going towards their schools, their infrastructure, building their roads, paying their public employees. And you can see how this could become a problem. This is in fact what happened with Greece during the past decade or so. We saw that Greece is not in a very good financial position. Ever since the mid-2000s, we saw Greece start to slide into an economic recession that they've been in for quite a while. So if you live in Greece, comment down below on your views on this. I'm always interested to hear people's opinions on this. But I am going to flip you around here very quickly. As I always like to do, I like to bring multiple sides and opinions into the story so that we don't create one specific narrative. And that's the idea that having a high debt to GDP ratio, having high debt in general, may be not as bad as what some people make it out to be. Now, one of those opinions is that, yes, although we see the debt to GDP ratio increasing in America, Well, you could also argue that the cost of debt has gone down significantly from the 80s and the 90s, and so therefore it may be more acceptable to carry more debt if the interest payments on that are considerably lower. For example, I'll throw up this chart here to show you. This is from Fred, the St. Louis Fed, and you can see that, yes, the total cost of debt, if we look at the interest for this debt from the 80s and 90s, you can see it was hovering somewhere between 4 and 5% versus the past 5 years here today, looking at somewhere between 1 and 2% on average interest. So that could certainly be something that we do want to take into consideration. I think it'd be foolish to leave something like that out when we are looking at some of these situations that we are in. And hey, it's also important to realize that sometimes carrying large amounts of debt, it's almost necessary in some cases depending on a country's situation. For example, at the moment, we are looking at a recession that we're in, and so most people agreed from both sides of the political spectrum that we needed some stimulus to get money into the hands of the people, that we needed to do a number of things to stimulate the economy. So in 2020, we are going to have a very large budget deficit. But it's not to always say that having a budget deficit is bad. Sometimes many economists agree that it could be a beneficial thing during poor economic times, and it usually does work out. For example, let's look at the UK after World War II. They had a pretty sizable amount of debt, about almost 250% debt to GDP ratio. And from this point, because of course they borrowed a lot of money for the war efforts during the Second World War, which they needed to do, and then they were able to pay off most of this debt through the next 30 years and lower that debt to GDP ratio to a much healthier number. But for a time being after the Second World War, a lot of UK citizens, a lot of their money was going towards paying off all of this debt, which did potentially have some type of hindrance on that economy's growth. All right, so how do we fix this problem? How do we find some type of solution or common ground so that we can find a way to balance this budget? It's the same as if people like you or me were to go out and start spending far more money than we're making. You can sustain it for a while, maybe a few years, maybe even longer, but at some point you're going to build up a mountain of debt that you can no longer ignore. And I believe that's what's going to happen to America at some point. And I do not believe that America is going to collapse, and I don't want to do fear mongering because I think we will work all of this out, but it's important that we do prioritize this to a certain extent. Now, there's really 4 options that are available to us when it comes to fixing this problem with the amount of debt that we may be carrying. Option number 1 is to hit the like button and just watch the video, which, I would appreciate it. Option number 2 is to find a way to increase government revenue. Now, there's a couple of ways to do this, and this essentially boils down why people butt heads in politics and get mad at each other and call each other's names and comment angry comments in the comment section on this video. But option number 2 is to find a way to increase government revenue. And there's a couple of ways that you can do this. You can either raise taxes or find some other way to increase taxes, whether you're doing it through some type of income tax, capital gains, wealth tax. You can go on that journey on your own and figure out what you believe is the best option. Or the other option for increasing government revenue is to find a way to increase the overall business and economic activity in a country, which would, in theory, allow a government to collect more money even from the same tax rates because the economy and GDP is growing at a faster rate, which would theoretically bring in more money from the government to fund their programs. Now, the other option, the third option, is to find a way to decrease government expenses. Now, let's be honest, this is going to be pretty difficult to do considering the certain obligations that the government has, for example, Social Security, Medicare, and Medicaid, which make up some of the largest expenses and obligations that the government has. It's going to be difficult to cut those, but of course you could go down that route of finding ways to cut those if you would like to, based on your political views and what you think is best. So I really don't like talking about politics. It just gets into a total mess, and then people get super angry and they start commenting all kinds of stuff about how stupid you might be. But the fourth option here, which is a little bit concerning, is we could theoretically print the money. See, because our debt is owed in US dollars. It's not in yen, it's not in euros, it's not in global British pounds. It is in US dollars. So if we owe $24 trillion, our 2 biggest debtors are China and Japan. So we could theoretically hop on over to our good old trusty money printer, brush off the dust, and print 24 trillion George Washingtons, and then just go pay that to the countries and the places and the people that we owe our money to. Now, it's not as simple as that. Of course, if you've learned anything about economics, it's not as simple as just printing more money, because that is not the solution. We saw how that worked with Germany or with Zimbabwe, and it creates a big financial mess, which is another way that you end up paying for the debt that the country has, which is going to be through inflation. See, because today, if you go to the grocery store with a $100 bill, you can probably get a full basket worth of food, at least a basket or a full shopping cart worth of food. But if you go with that $100 bill to the grocery store in 20 years, hell, you might only be able to buy a jar of peanut butter. It's difficult to tell how much we're going to see inflation, but that is how people pay for it as well. And that's why it is important to find a way to grow your assets at a faster rate than inflation. And that is why we like to discuss how to invest on this channel. We have a number of videos showing people how to get started investing. I'm not a financial advisor, of course, you already know that, but there's a lot of different routes that you can go to grow your money at a faster rate than inflation. And so hopefully you can diversify and set yourself up for financial success. So to summarize this video, I don't believe that the world's going into total economic collapse and that we're all going to die and it's going to be Armageddon, it's going to be fire in the streets. I think we're going to figure it out. I hope we figure it out, but I think it's something that we do need to take into consideration and really prioritize. This year, during 2020, we're going to have a large budget deficit because we're in a recession. But the most important thing is to not go into recessions with massive budget deficits. When we have prosperous economic times, such as the past 10 years when the economy has been growing, that is the time when it's really important to have a balanced budget so that you're able to pay off those debts. That is an opinion, of course. All of this is an opinion, so hopefully you can find some value in it. If you do, make sure you drop a like, subscribe to the channel if you haven't done so already, and I'll see everybody later on this week. We're coming out with a fun video that I think you may enjoy. So thank you, and I'll see everybody next time.